Moving to Syed Aamir Ali Saab, who is the President and CEO of BankIslami. Amir, based on your experience, can you highlight what are the legal and regulatory challenges that we see to achieve in achieving our vision? We were talking about Islam banking law and something, so your expertise, please.
Thank you. Bismillah ar-Rahman ar-Rahim. So let me be more open about it, and instead of criticizing that things are not present, I believe a lot of things are present in Pakistan. And that's the reason we can see a lot of growth, and a lot of growth is going to come in this space. So with reference to laws and regulation, so if we talk about laws and regulations, so the primarily because Islamic banking or Islamic finance is about it's about civil. The laws which deals this subject in Pakistan is the commercial portion of the civil laws. So if we talk about the commercial laws in Pakistan, which are part of civil laws, so the main document which governs the commercial laws is the Contract Act, which exists in Pakistan. And very interestingly, almost pretty much all the provisions of the Contract Act are aligned with the principles of Sharia, because when we do transactions, Islamic banking, the contract law or the Contract Act allows us to enter into an agreement, to make promises, promises even unilateral and to make bilateral. And when they make bilateral promises, they call it an agreement. And they say any agreement and every agreement enforceable by law is a contract. So most of the transactions in Pakistan, the Islamic banks are being done within the ambit of the Contract Act. And all these documents are enforceable under that law. So there is pretty good enabling environment available as far as entering into Islamic finance transactions are concerned, because very interestingly, all Islamic finance transactions are either trade-based transactions. So every single manufacturing or a service-based organization is already entering into a trade-based transactions, either under the Contract Act or under the Sales of Good Act, or these are rent-based transactions, or these are equity-based transactions. So all these are governed under laws, and these are fairly enforceable and have been tested over a period of time. Now there are certain laws where there are certain impediments. Some of them have been resolved with the help of the industry and the central bank. I remember in the revenue laws, which is one portion of the commercial laws, there used to be a difficulty with reference to sales tax on trading of goods, and in certain cases the revenue department, the income tax or the sales tax department have moved against the corporate entities and have said that this transaction, be it murabaha or istisna or whatever, we will tax it. But luckily a few years ago, I think 5 or 6 years ago, with the help of State Bank of Pakistan, the law has been properly amended and all the Sharia compliant modes have been added into the sales tax law, saying that these are not considered as supplies, that are not subject to sales tax. So a good thing has happened there. Even in the income tax law, although there is little bit of confusion still left behind, but generally the law says that there should be no negative treatment, or there should be no negative differentiation against Islamic financing, and they should be treated for tax purposes in a similar manner as any other type of financing transaction is treated. So there used to be a situation, I remember I used to appear in the High Court on behalf of one of our corporate clients, where the tax department has added back the depreciation in case of a diminishing musharaka transaction. Because this provision in the income tax law was not there, although the case over a long period of time was decided in favor of the client on the basis of the principle of justice and equity, that Mizan Bank is not claiming and the customer is claiming it. But now it's pretty much clear that all forms of Islamic finance transaction has to be dealt in a manner that they are fair and transparent and should not have any negative differentiation towards the customer and the Islamic financial institution. So I think a lot of these steps have been taken. Few of the steps which are still pending, which at times comes in our way when we are doing transactions with reference to immovable properties. Because the immovable properties, the Transfer of Property Act and the Registration Act, which deals with the registration of sale and purchase of properties, there is a huge tax incidence, because if you do a diminishing musharaka transaction or a sale or leaseback transaction, on an immovable property, it will be subject to tax twice. And this issue has not yet been resolved, although it has been taken up a couple of times with the federal government. But the problem here is that it is a provincial subject. So I think this is one thing which all provinces has to understand, had to come up in the Council of Common Interest, should come from there, because there is a concept in constitution when they are common issues, they are dealt at the federal level with the provinces. So I think this is one law which creates some hurdle in doing sukuks at times, although some workarounds have been agreed by the legal fraternity and the Sharia boards of the central bank and the Islamic banks, but this is one law which has to be fixed. As far as now, if you look at other laws, the other laws of Pakistan actually are not prohibiting doing Islamic finance transaction. What they are doing, they are also allowing doing interest-based or riba-based transactions. So this is something which exists in the Pakistani laws, which has been taken up recently by the Federal Shariat Court decision, as all of us know, and most of these laws has been highlighted. I think this exercise has been done a couple of times. The word interest, interestingly, all the constitution says that our religion is Islam, and this way there is a concept under Article 31 about the Islamic way of life in our constitution, but still the constitution has used the word interest at different, under different articles at different places, although probably they never intend to use it in the way which is riba, but naturally the modern form of interest is equivalent to riba. It has been decided. So that has to be taken care of. But I think the effort of aligning the law with our practices is not that difficult. It will be done fairly easily. What is more important is doing the effort in the right direction to scale up the Islamic banking and the Islamic finance concept. There are hardly any situations where law comes and stops the Islamic banks and the Islamic financial institution from doing any transaction. Most of the times our law is neutral. There are very few occasions where a law is creating a hurdle, because most of the hurdles have been taken away with over a period of time. Recently, the central bank has almost every single scheme under Islamic mode of finance. And I remember when I joined Islamic banking industry, we were struggling even to have the ERF scheme under Islamic banking for Islamic banks. Then the LTDFF take a lot of time. Now we have every single scheme. We have now a lender of last resort concept under the Islamic mode of finance. We have a OMO concept under the Islamic mode of finance. I think we have come a long, long way. Sure. So we are really in the right direction. And if you now look at the laws, nothing has been changed probably in the Banking Company Ordinance or the SBP Act. And still Central Bank has achieved that. Nothing has been changed in the Contract and the Sale of Good Act. And still all this growth has been experienced in Islamic financing. So it's about the positive mindset, the passion, and an aptitude and an attitude to work towards our objective, rather than looking about and just fishing the impediments. These impediments are very little. Actually, the opportunity is much bigger. So this is my
there's a will, there's a way. Thank you, Aamir, for giving us the positive encouragement.